Hey guys, so welcome to this next part of the elite strategy, and this one's going to be perhaps one of the most important ones that you're going to look at throughout this whole part of the course. Now we're looking at the full fundamental guide. Of course, a lot of you guys actually join this course and mentorship because of that fundamental edge that we do have. Not many smart money concept traders even teach this kind of thing. So definitely, it gives us that different perspective. But what I'm going to say is this, there's going to be a lot of, this video is going to be a lot longer than some of the other ones because we're going to be getting into quite a lot of detail. So definitely start taking notes as we do go through, and you're going to see pretty much what's going to be relevant, moving forwards. And I'm going to tell you my whole strategy in terms of how I actually find out fundamentals and how I apply them as well. And we're going to go through a case study at the end as well. Okay, cool. So as you know, in this mentorship, it's always fundamentals first, then you've got that technical analysis that follows afterwards. So you always have that fundamental bias, and then from that, we can find our point of interest to look at trades in a certain direction. Now, what's provided in this mentorship, as you know, every week we do send out a fundamental report that goes through pretty much all of last week, what happened, the following week's events, each currency broken down with both positives and negatives, and then each currency as a conclusion. So from that, we'll be able to tell, are we looking for example, more bullish on US dollar? Are we looking bearish on the pound, as an example? This type of thing. The PDF is always uploaded in the fundamental breakdown section. So definitely every single week, do have a read through and you're going to see how relevant it is as well. Now use this to your advantage. Have a read of it, and slowly, you'll start to see how we can potentially use our directional bias in terms of fundamentals to help with our analysis. Now, in terms of the fundamental report that I do send out every week, now I'm going to say this as well. If you're starting as a complete fresh trader in terms of fundamentals and you have no idea about what even an interest rate hike is or what even the inflation report means for a certain currency pair, you're not going to find it too easy to understand at first because it's a lot of information. And that's why the whole fundamental course has been made there for you to fully understand pretty much every aspect of fundamentals that there is going to be. Is pretty much in these four sections. So even going through things like, economic cycles, monetary policies, all this type of thing, everything's going to be included there and talked about. Pretty much now it's all about applying it. So that's what I preach. You learn everything in the fundamental course, you take your notes and all that. Then applying it is when we're reading the articles, when we're going through everything, and then understanding the impact that it actually has on the markets. It's all well and good knowing the content, but now it's all about applying. And this is the one thing I do see when I speak to certain students and say, I've gone through the fundamental course, what should I do now? And that's exactly what I'm going to talk about here. So you've got that in your head, you understand what's important, and then what we're going to be doing. Just before I get into the real detail of all of this lesson, I just want to quickly explain my whole fundamental journey, just so I can set sort of an idea of what it was like for me as well, and potentially what it will be like for you. So after having learned every bit of content that revolves about around fundamentals, and obviously that's all been taught in the course, I would still say I was confused in the beginning because I didn't know how to apply it too well. So even though I knew the content, I understood it, when it comes to applying it, I didn't really know exactly which way the markets were going to go. So what I needed is to figure out how to do it. So I figured it out. I figured out my routine first of all, and then what I needed to stick to every single week. I pretty much knew that I need to read up and study where that fundamental bias lays, and this is pretty much through um, your weekly research in terms of fundamentals, using the articles that I'm going to outline. From that, we'll be able to tell both positives and negatives, and then from that we can draw a conclusion. I would say this generally took me about 2 to 3 months to really start applying fundamentals and effectively use it. It wasn't as quick as learning technicals, for example, because you can pick that up even in a day. When it comes to fundamentals, you're really learning, as if you're at university. It really is something like that. You're learning about macroeconomics. So there's a lot of detail to go through, but all in the end, it's all worth it. That's what I'm saying again here. It's going to take time, but in the end, it is worth it. It gives us that edge in the market, and we can understand fundamentals and then apply it to our technical analysis. Now, up until now in the video, I've basically explained to you the whole reason why we do it, and then also how to start learning it. Now I'm going to actually start to explain the real details of what you should actually do every single week. So, how to do your own fundamental research in terms of a weekly analysis. This is exactly the method that I use and exactly the method that I want you to start using as well. Over time, I don't want, the whole point of this mentorship is not that you rely on me and you rely on all of my research and all of my technical analysis, all of my fundamental research, everything like that. Eventually, I want you all to become self-sufficient traders where you can do this all by yourself. And that's how I know that this mentorship is working and why it's been working this whole year in everything that I've taught. So, first things first, read through the weekly articles. Look through a range of articles and bank reports that explore what happened in the previous week and what this means for the market. As well as this, you're going to be researching what is going on in the week ahead. So pretty much what events are going to be coming up. Then you start to understand the important information. So there'll be a lot of reading, but the key skill to develop here is that we pick out relevant bits of information. So as you're going to realize that as I go through my fundamental breakdowns, I pretty much have all of my websites up. I read what's important, and then I just use that important information and just pretty much bring it across within the article that I do write up. So the key tip here is as you go through your list of resources, you will come to realize that the same things will be said. It just reinforces the idea that many experts and sources see the same point of view. So what I'm trying to say here is, let's just say, for example, I have about 10 websites that I usually look at. In the first one, they're going to say something. In the second, they'll probably say something similar. And I'm going to see this happen again and again. It just reaffirms the same idea. One example I can give is, when we're talking about interest rate hikes in terms of the US dollar and what the Fed has done recently, every bank article is going to say the same thing because it has that same effect. You see what I mean? It's all about understanding what's important, and then you're going to see it come up again and again. Now, number 3, start to understand the positives and negatives. So with every bit of information, you can begin to understand whether this will be positive or negative for that currency. This generally is going to be a skill that you're going to pick up over time. It really is about, first of all, learning the fundamental course. Then when you've got that and you're reading these articles, you really do have to analyze and evaluate what's important, what's positive, what's negative for the currency. This is not going to be a quick thing. It's going to happen over time, but you will get there. Trust me, with more and more research, you'll understand the effects that keep repeating, that keep happening. Then number 4, in terms of conclusions, you can now start to write them up. So once you have a solid understanding of the fundamentals, you can start to draw a conclusion on how this currency may do. Remember though, at times we might not have a conclusive direction on a currency. Reasons for this is we might be waiting for more data, more information, or perhaps it just might not be too relevant at that point, and we're just waiting on maybe just a bit more. But generally, from week to week, you will have certain currencies that we know what's going to happen with them. I'm not saying that you're going to know where every single currency is going to move on a week-by-week basis. But when massive news events happen, we will understand what impact that has and what that means for the currency pair. An example I can give, and I haven't talked about it in this part of the video, but USD JPY, just as an example, you can even search this up on your charts. The whole reason why it's moved exactly the way it's moved in 2022, have a look back at it on a daily and a weekly basis, you're going to see it's just been moving bullish. And that's because of the fundamental divergence. Over time, you're going to understand this. Then, in terms of the full resources that I've been talking about, for all of these, where is it? So for all of this report that I do use, of course, I use the same resources every single week because they've become reliable for me and I know that it works. The resources that I would definitely recommend, the main ones that I use are Action Forex Weekly, and then Pound Sterling Weekly as well. It's quite, these two I would generally say are some of the best resources that I do use. And then from that, there's also more resources. So as you can see, This is pretty much all the banks and insights that you're going to get. So all of this goes into the detail that pretty much all the banks around the world are seeing in the currency markets at the moment. So generally, I would start off with these. If I feel like my bias still isn't as clear, then I will definitely dive into these a bit more. Some examples I can give off the top of my head. Wells Fargo is a good one at the top. ING, Maybank as well. Scotiabank is quite a good one. HSBC as well. Saxo Bank as well is quite good. And then the other ones, just off the top of my head, they are good, but not as great as some of these. And I can say this off the top of my head because I've been doing this every single week for the past year. With fundamentals, it's not going to be a thing where you pick it up in 1 week. I'm telling you that right now. If you feel like you can come into this course and not study and not, get into it in detail and really trying to learn and trying to work at it on a weekly basis, this right here is going to be irrelevant. You're not going to understand it because it can be complicated, but it's not complicated once you have that consistency. That's one thing I'll definitely say. Now, just as an example, here we've looked at GBP and USD. From this, I've taken all the points, both positives and negatives. And then at the bottom, we can see, for example, the conclusion. This is the type of way that I would usually write it. So this is an example of how you can look at the relevant points and then make an informed decision at the end. So for this particular bias, we looked at GBP being weaker, US dollar getting stronger. Now, what does that mean? If GBP gets weaker, US dollar stronger, that ultimately means GBP USD starts to drop. So, if you are struggling to understand the correlation between a strong and a weak currency, just look in the markets, you will start to see it straight away. There's going to be that correlation between two pairs and what that means, two currencies and what that means on one pair. Now, the trades that are clearer to see in terms of a fundamental direction will be because they're individually, one of them will be strong and one of them will be weak. This is one thing I'm going to say. Definitely start to look at this as start to look at pairs that have this. So you really want to look at pretty much fundamental divergence is what it's called. Fundamental divergence means that one of them goes one way, the other one goes another way. One example throughout this year, again, like I mentioned, USD JPY, it's been moving exactly like that. So yeah, that's pretty much going to be it for this. You're going to look for one that's strong, one that's weak. Of course, there's times where, for example, both one might be weak, another one might be weak. What does that mean? That means you shouldn't really be trading that pair because they're going to be too similar. You want to look for a pair that's opposite. So the points, the steps that you need to take. Step number one, obviously after your fundamental analysis, you need to start on the 4-hour time frame. This is basically based on technicals. You'll be doing your analysis for the week ahead. The 4-hour time frame gives us a nice view of the previous 2 weeks of price action. A bit more than that, obviously, but that's pretty much what we're going to be looking at. The key points, mark out key areas of market structure. So market structure is meant to be done on the 4 hours, what I would say. Start to understand the general trend. And then are we within premium or discounted areas? Like I said, on a technical basis, you really do want to be waiting for premium or discounted areas in terms of entries. Then step two, you move down to the 1-hour time frame. Because once we've identified market structural areas, we can start to understand the trend and consolidation we're in. And then we can look at it in more depth. So a few key points here again. Identify the higher time frame liquidity areas. So this is where we start to look at liquidity. Then we can start to look for points of interest for the week ahead. By this, I mean you can start to look for supply and demand areas. You can start to look for order blocks, any imbalances that we might be moving in towards, anything like that. This area on the 1-hour time frame is what I would say is now you're going to be looking at liquidity and sort of points of interest. Then, if you really wanted to on a weekly basis, you could do this, but I don't always do it, is what I would say. So at times you might want to refine a bit further if entering straight off a limit, for example. However, if you are going to be using a confirmation entry, then you might end up just deciding to leave all your analysis maximum down to the 1 hour. But let's just say you refine it even further. Some of the key points that you want to look at here. So for me personally, the 15-minute time frame is one of the best in terms of refining from a weekly analysis basis. What I mean by this is you do your weekly analysis, you do your 4 hour and your 1 hour. That's for your points of interest. Once you start refining your points of interest, a 15-minute time frame is really good when you start to look at order blocks and all that. You could go even further down to the 5 minute, but personally, max I go down to is 15-minute in terms of looking at entry areas. And then if I am confirming the trades, I would go down even further. But pretty much that's it. So they're the few steps that you need to take on a technical basis. Now, we've talked about everything so far in detail. What I really want to do is actually give an example of how this is actually applied. One of them is going to be GBP USD in terms of both fundamental analysis and then technicals. This is going to be an example that we've seen in the Discord as well. I believe this happened a few months ago, but it's one of them that was really clear, and I just wanted to bring that across to you guys as an example. So in the next few pages, we're going to explore the case study of GBP USD. This is the outcome of it. So it hit our point of interest at the top over here, and then price started to break down and then started to move downwards. So first of all, fundamentals were looking for us for sells. That's what we were looking at. Then we went on to the 4 hour chart, the 1 hour, and then the entries were on the lower time frames as well. So you can kind of see how everything is going to come together here. Now, step one, fundamental analysis. First thing I would look at is if we're looking at a pair like GBP USD, you look at them individually. So you look at GBP and then separate from US dollar. For the US dollar, we concluded that we were looking for buys. I'm not going to get into everything over here. You can have a little read. If you want to pause the video for a second, you can just see what we were kind of looking at. But generally, we were looking at positive points compared to negatives. So I had, as a conclusion, still a positive outlook on the US dollar, where the recent CPI data supported more aggressive rate hikes still, on top of that, on top of all the recent points in the past few weeks. So as explored above, I was expecting to see more strength in the US dollar. Now moving on to the pound. With the pound, I was looking for more sells. So I was looking for GBP to be bearish. Again, you can have a little read. Just pause the video for a second. You can kind of see exactly what we were looking at. But generally, this was my conclusion. Continued negative long-term outlook. Truss is trying to establish a bit of confidence in her leadership, but the market is not taking it as well with her recent U-turn of tax cuts. Still, though, too many negative signs to be avoided. A lot of movement will be based on the decisions taken over the next few weeks. Long term, though, still negative. So as you can see, from all this information here, this is the conclusion that I drew. Again, like I say, pause the video for a second, have a look through the points, and then see how all of this leads into that conclusion. Like I said, it's not going to be a quick thing where you understand the fundamentals at first. It's going to be something that you develop. And in all honesty, you're going to have that backing of me doing this on a weekly basis. But I really do want every single person here in this mentorship to be able to do this by themselves, to really become self-sufficient in that way. Okay, so now step two is applying the fundamentals. So we know that the pound, we were looking for sells. US dollar, we were looking for buys. So ultimately what that means, GBP USD, we are looking for sells for the week ahead, or even for the weeks ahead. So now moving on to step three, the 4 hour chart. So this is everything that we had gotten pretty much in the past. So just starting off, market structure, we do have this range. So right now we have the high, we have the low, and we're kind of pulling back upwards. Ultimately, though, we're still waiting for that GBP USD long-term weakness, right? So let's just look at this from a technical basis. We have a mitigation of this breaker block over here. And then this order block over here has been untouched. And there's two areas that I'm looking at. First of all, we do have liquidity there. So I'm expecting a potential inducement trade. So what that means is I'm expecting for price to take that liquidity like this and then drop as soon as it touched that order block. Again, though, we do have a higher order block at the top. Both of these areas are valid for two separate reasons. Here, for example, it's respecting price quite nicely. Here, it's still, within this range. So we can still, if it does break above this area, we can still look for sells here, just above this imbalance as well. So I hope that all makes sense. Areas to look for sells as well. We'd look for it to close this imbalance down here. And then, of course, if we're looking fundamentally for more sells, we can see it move further and further down. Then, in terms of step 4, the 1 hour chart. Now we're zooming in a bit more. You can pretty much just see the same type of thing. Equal high liquidity that I'm expecting to be taken. Mitigation of that breaker block first, and then this will be that untouched order block for sells. So there's two things. We have that equal high just below it, so that it will act as an inducement trade. Second point as well, this is a second mitigation area. So it's already touched before. Now we're looking for it to touch again. You see what I mean? So apart from that, that's pretty much the weekly analysis that we looked at. Then step 5, if you wanted to, again, you could refine the area a bit further. This is on the 15-minute chart. You can see two areas or two order blocks that do look quite nice. If you were going to enter on this straight away, you could set either 2 limits, 0.5% risk on each one, or you can just wait for 1 limit on the high time frame and then you just enter kind of from both points of interest on the lower time frame. Or the other option is to just confirm your trades. And we've talked about that many, many times in this mentorship, confirming all them trades. Now let's see the outcome of all of this. Before, we were waiting for this area for sells, as you can see. Afterwards, you can see what happened. Price took the equal highs at the top. It went there, mitigated this order block. Then it started to break downwards. And again, you can see one entry could have been here again, but price actually just continued further down. And you can kind of see what actually happened. In terms of this trade, was a very, very nice bit of analysis, following fundamentals as well. And I just really wanted to prove to you how you can actually put this all together. Starting from fundamentals all the way down into technicals. Okay, so apart from that, remember now, I just want to give this bit of caution. There are times where we don't know the bias yet. We might be waiting on a certain bit of news to come out, and then we're going to review it. So say, for example, there's a big central bank decision coming out soon. We have to kind of wait on that, right? You could enter positions before, but you want to be mainly waiting on that. Or, for example, there's times where we don't have a bias at all because there's not really too much going on with the currency. So there are times where that happens. You just have to be patient with it all. And fundamentally, we do want to wait for it to be clear, is what I'm trying to say here. So you've now seen the power of fundamentals and using that direction to help us. Now, it's just a matter of learning it fully, which is all within the fundamental course. And then secondly, it's then moving on to reading articles weekly to understand what's currently going on. The more and more you read, the more and more you're going to learn. That's one thing I'll definitely say. Then thirdly, applying a bias. So we're going to be having that fundamental bias, which will then help us with our technical analysis, because you're going to be looking for trades in a certain direction. So in terms of taking this even further and learning even more and more, if you only do have the technical course, but you do want to get the fundamental course, going through this whole mentorship, I've had many times where a lot of students have upgraded. They started off with technical, they moved on to the fundamental part of the course as well. You don't have to pay the full price again. It's literally just the upgrade difference. So if you do want to get that discount code that you can put into the website, you just check on the Discord. It's that bit that says the upgrade full course. It's in the extra area. And then at the bottom, there is going to be the link to upgrade and then also the discount code there as well. So this is for everyone that is actually intrigued to learn more and more about it. You're going to be getting full access to the full course. Obviously, that does include, let me just get back to it, all of this section that focuses just on fundamentals as well. But of course, there's going to be more and more coming out for the guys who have purchased part of the bigger course, which will be talked about in another video. But apart from that, guys, this is pretty much it, how to actually apply fundamentals. I really, this has been a longer video than usual. I do hope it has helped. But yeah, that's pretty much it going to be for this, how to be self-sufficient in that way. I really do hope it has brought a bit of value. But yeah, guys, that's pretty much going to be it for this part of the elite strategy. Take care, and I'll see you all in the next one.